Hello everyone. For this session, I will be discussing the role and scope of investments, which will serve as an introduction to our subject, which is investment management. At the end of the session, you should be able to do the following. So feel free to pause the video and take down notes or take a screenshot of this slide. So moving on, and since this is investment management, we should be able to define what is an investment. Now, normally an investment is defined as a vehicle, okay, wherein you can commit your funds or your assets, most of the time in the form of cash, no? It's more of a commitment of cash wherein you expect that there will be positive returns in the future, and at the same time the value of your investment will be preserved. Now, from the definition alone, you can already identify or determine the basic purpose of investment. And that is number one, to generate a positive income. And number two, okay, to preserve the value of your investment or the amount that is invested. Now, normally, students will ask, sir, what if the investment did not generate positive income? What if the return is negative? Okay, there's net loss. Is that still considered as an investment? The answer is yes. Take note, what is important here is our intention to generate positive income, okay? Not the actual income or loss. Okay? So, there. Now, one of the most important components of investment is our expectation of returns. So, we should also be able to identify or define what are returns. There are actually two classifications of returns. First, you have the current income, and then second, you have the increase in value. When we say current income, we are actually referring to the actual amount received from your investment. Take note, these are the actual amount received, which means they are already realized. Some examples are dividends, which are received if you are a stock investor, or you have your interest received if you have investments in time deposits, or let's say bonds. Now, if you compare that with the increase in value, also known as the capital gains are unrealized gains. They come from the change in the value of your investment. So, for example, if the value of your investment is 1 million to begin with, and then after some time, or let's say after 1 year, the value is now 1,200,000, there is an increase of 200,000. That is now your capital gain. Take note, this is an unrealized gain. This is also known as your paper gain. You can only realize this if you sell your investment. Now, if you add the two, no, let's say, aside from the increase in value, you were able to receive dividends amounting to 10,000 pesos. So that's your current income. Plus the increase in value, which is 200,000. You add that, that's now your total return. And again, your return could be positive or negative at the same time. Now, there are different types of investments, okay? You can classify them according to whether they are securities or property, okay? Now, when we say securities, most of the time we are pertaining to stocks or bonds or options, and of course, there are more, no? When we say securities, your investment is actually committed to intangibles, no? Like, for example, you have your ownership of a corporation. Okay, that is certified through certification of stocks. So what you can only see is the certification, the stock certificate. The same is true with your bonds, no? If you are a bond investor, you can only see the certificate, but actually the actual investment there is you being the creditor. Your right to collect from a corporation. Okay, so those are your securities. Talking about options, you have two options, no? Your option to buy and option to sell. Also known as your call option and your put option. Now, if you have your intangibles, you also have your tangibles, okay? First, you have your real properties, okay, which pertains to your land and building. You also have your tangible personal properties, okay? Some examples, you have your gold collections, no, on artwork, and you have your antiques. Now, these are just examples. You can also classify investments, no, according to whether they are direct or indirect. Now, if you are holding a direct investment, okay, you directly acquired a claim, okay, from the entity. So, for example, if you own the stocks, no, of corporation A, B, and C, or for example, you own the bonds, okay, of corporation A, B, and C, you are now considered as a direct investor. And that investment is direct. Now, what is indirect? This is when you own a part of a portfolio. Now, let me just define a portfolio. A portfolio is actually a group of assets or a group of assets or investments, I mean. Now, this group of assets or group of investments is managed by an entity, a financial institution, okay? And that entity is now selling a part of that portfolio. One example is mutual fund, no? A mutual fund, you don't actually go to the corporations, okay, issuing the stocks. Instead, you go to a mutual fund company, like for example, let's say Sun Life, no? If you buy a mutual fund product, that is now considered as an indirect investment. Mutual funds are like, ano ba? One of my favorite example is it's more like a cake, no? Excuse me. If you want to, let's say, come up with your own portfolio, okay, you want to cook your own cake, so you try to buy these ingredients and put them all together to come up with the cake. That is your direct investment. But if you are going to buy a ready-made cake, ayan, let's say from Viscos, you buy a slice of a perfectly baked cake. Ayan, you are now considered as an indirect investor. Tama ba yung analysis ko? If you try to look at the investments as, let's say, ingredients, kung gano'n yung comparison, ano? Ayan. So, the mutual fund company is the baker. Siya yung gagawa ng cake. Ikaw, bibili ka lang ng part ng cake. Okay, so that's what you call indirect investment. I hope I'm making sense. If there are errors in this presentation, I'm not going to start another recording. No, I just correct it as we go along. So just in case I was not able to correct my error, okay, and you have any questions, please feel free to let me know. No, you can drop a message, no, doon sa Canvas inbox natin, or maybe if we have a comment section below. Ayan. Feel free to correct me. Okay. Anyway, let's continue. Types of investment. You can also classify them according to whether they are debt investments, no, equity, or derivative. Okay. When we say debt, the investor lends funds in exchange for interest income and repayment of loan in the future. So, for example, you have your bonds. Okay. Now, you also have equity, which represents ownership in a business. Okay. So, you have your common stocks. Actually, between debt and equity, you can add this in your notes. You have your hybrid securities. When we say hybrid securities, they have the same features of equity and debt securities. No, one of my favorite examples, your preferred shares. Preferred shares are actually equity shares, but since the return for the security is fixed in nature, it's more like an interest. Ayun, so fixed siya. So it has a feature of an equity security because, these are stocks, but then the return, okay, behaves like an interest, fixed in nature. That's why it's called hybrid securities. A security that has both the features of debt securities and equity securities. And then you also have your derivative securities. When we say derivative securities, these are neither debt nor equity securities, and they derive the value from the underlying assets. So, for example, you have your options, no? Option to buy and option to sell. Okay. Now, what is an underlying asset? An underlying asset, also known as primary asset, is actually the asset wherein the option or the derivative's value depends on. How do I simplify this? Anyway, let's have an example. Assuming you have the option to buy. Okay, so how do you call the option to buy? I think it's called option. Okay, parang nakalimutan ko na, but please correct me if I'm wrong. The option to buy. Okay, let's say you have the option to buy a stock at 50 pesos. The stock is the underlying asset. And the option to buy, your right to buy at 50 pesos, which is a predetermined price, is now your derivative. Now, it says that it derives the value from the underlying asset. Let's try to imagine this. Okay? Anyway, I'm recording from our office, no? That's why I don't have the pen. But anyway, sana nag-drawing na ako ngayon. So let's just imagine, assuming you have the stock, no, which is currently being traded at 50 pesos. Now, if the fair market value of the stock is going up, no, from 50 to 55 to 56 to 60 pesos, and now you are a holder of the option to buy at 50, first question is this a good thing? Of course, the answer is yes. The market value is going up, and you have the right to buy this at 50 pesos. So now, you can actually trade your options. You have two alternatives, no? You have two alternatives. You can exercise your option, okay? Exercise the right to buy at 50 and sell that, no? Sell the stocks at 60 pesos. So now you have a return, no? You have a profit of 10, or you can trade the option itself, because while the stock's value is going up, we expect that the demand for the option to buy at 50 will also go up. Imagine if the price goes up to 70 or 80. Now you have the option to buy at 50 pesos. Of course, okay, a lot of investors would like to exercise that option. There you go. So that is now your derivative securities. Diba? Oh yeah. Okay, so may katabi ako. She's asking, so what if investors are willing to buy more? Of course, if investors are willing to buy the option, if you try to apply the rules in economics, the higher the demand, the higher the fair market value. So the price of the option will also go up. Why? Because the price of the underlying asset, which is the stock, is going up. Okay, anyway, we have a reporter to discuss the details, no, of options together with warrants. Now, moving on, you can also classify investments according to their risks, no? You have your high risk or low risk investments. Now, every time we talk about risk, this is the chance that actual investments return will differ from those expected. Okay, to simplify, this is actually the variability of your returns. Okay, and most of the time, this will be measured in terms of ranges or standard deviation. Anyway, we have another reporter. Okay, I think that's group 3. I will discuss later our topics. Anyway, we have a reporter to discuss the details of risk and return. Now, to continue, you can also classify your investments according to their duration. You have your short term. If the maturity is within a year, beyond 1 year, that's now considered as long-term investment. You also have your foreign or domestic investments. Okay, and I think this is self-explanatory. Okay. Key participants in the investment process. Okay, basically you have 3. You have the government, business, and then you have your individuals. The government actually is more of a net demander, okay, of funds, no? If there are funds in the government, of course there are kasi nagbabayad tayo ng taxes. Most of the time, these funds are used in national and local projects and operations. Now, most of the time, okay, their expenditure is more than the revenue. That's why they are considered as net demanders of funds. Okay. For businesses naman, okay, sometimes they also provide funds, but most of the time, the money is used in investments in production of goods and services. So, they use more than what they can provide. That's why they are classified as net demanders of funds. Okay. And for individuals, okay, of course, we use money, no, for our consumption, but believe it or not, the individuals as a group, okay, typically are net suppliers of funds. Okay? So, ayun. Now, if you try to bring them together, we have the following investment process. Now, if you see the line in the middle, this is now your direct transaction, okay, or direct investment. Okay, where the suppliers of funds, let's say the individuals, will now provide the money to the demanders of funds. It could be the government or business entities who are in need of funds. Excuse me. Now, ano pa ba yung mga kailangan yung malaman dito? For indirect investment, you now have your financial institutions, okay, wherein they get the money from the suppliers of funds, okay, and they use this for let's say investments, or they provide loans to the demander of funds. Now, if there are trading involved, we also have your financial markets, wherein we can find money markets and capital markets. And sometimes your financial institutions also play a significant role in financial markets. Anyway, again, we have another reporter who is going to discuss on the details of this process. I just want to remind you that this is just an introduction of our subject. So, this is a little bit of everything. Okay po? Types of investors. Ayan, you have your individual investors. They invest for personal financial goals. Like, for example, if we are talking about retirement, or maybe they make investments because they want to have a house in the near future. Okay, so these are your individual investors. You also have your institutional investors. Okay, these are artificial beings who make investments. they pay the manager, okay, to manage other people's money. And so meron silang fund manager. Typically manage large amounts of money coming from the suppliers of funds. This includes banks, life insurance companies, and mutual funds, lalo na mutual funds, and pension funds. Okay? Sometimes, may combination pa nga which is actually a trend that I see, no? We have life insurance companies selling insurance with mutual fund features. Or you have mutual fund companies selling mutual fund products, but attached to these mutual fund products are insurance. Astig, no? Now, to continue, okay, this is just an overview of the different investment vehicles. So, if you have your short-term vehicles, you have your long-term vehicles or long-term investments. By the way, in this subject, most of the time, we'll be talking about long-term investments. So later, I'm going to discuss short-term investments, just to get that out of the way na. Okay, so when we say short-term, okay, normally the duration is less than a year. You have the following examples here, okay. Common stock, these are equity investment, okay, that represents ownership in a corporation. Fixed income securities, okay, like for example, bonds, okay, the investment vehicles that offers a fixed periodic return. Okay, for example, you have interest. Now, if you notice under fixed income securities, you have your preferred stock. Your preferred stock is a hybrid security. Why hybrid? It is a stock. I think I already discussed this earlier. It is a stock, so it is an equity security, but the return is fixed. That's why it's a fixed income security. Okay. Mutual funds, companies that raise money from the sale of shares and invest in and professionally manage a diversified portfolio of securities. Okay. And then you have the derivative securities. Okay. It was already discussed earlier. You have your options, and then you have your futures. Okay. Not my favorite topic. You also have other popular investment vehicles like real estate, tangibles, and tax-advantaged investments. And I think we have another reporter who's going to discuss on the details of this one, pero it's more on the definition and the nature. Most of the complex topics, no, are focused on stocks, bonds, and options. Anyway, excuse me. Steps in investing. Now, it really depends who is the author. Sometimes you only have 3 steps, but here, I'm using the book of, kanino ba to? I'm using the book of Gitman, and these are the following steps that he provided. First, you should be able to meet investment prerequisites. So, before you make an investment, you should already have the certain, your basic necessities insured, no? You should have enough buffer for your future expenses, whether that's for the next 3 months or maybe 3 years. Okay, so you have insurance, you have emergency money. Okay, you have your expense money for the next few periods. Now, once these amounts are already met, okay, you can now establish your investment goals. Okay, anyway, before I continue, there are a lot of investors that are not happy with their investments. Okay, why? Because they made an investment, but they were not able to meet the prerequisites. So, what happened if that's the case? Di ba? Parang kulang sila ng pera, no? Lalo silang naghirap. Anyway, to continue, step 2, establishing investment goals. Okay, so what are the examples of investment goals? Maybe your goal is to accumulate retirement funds, okay? Or maybe you just want to improve your current income, or you want to save for a major expenditure, okay? Or sheltering income from taxes. Is that possible? The answer is yes. Later, we're going to discuss that. Now, you can go to step 3. After identifying your objectives, you can now adopt an investment plan. A plan that will match your objective. So, you write this down, no? Gaya ng sinabi ni Warren Buffett. Ayan. You develop a written investment plan. You specify a target date and the risk tolerance for each goal. Now, when we say risk tolerance, this is the total risk that you can tolerate, that you can absorb, okay, in the, at a given level of return. Sayang kung meron lang sana akong pen, I could draw some illustrations, but anyway, nagmamadali rin naman tayo. Now, to continue, step 4, evaluating investment vehicles. This is when you try to identify which of the available investments were able to meet your minimum required rate of return based on your investment objectives, okay, and at the same time within your risk tolerance. Take note, when we talk about returns, okay, we have our minimum return. When it comes to risk, we have our maximum risk tolerance. So if there are different alternatives, anyway, there is a separate reporter for this, but only for spoilers, no? If we have different alternatives, no, different investment alternatives that has the same level of return, they were able to meet your minimum required rate of return. What will you choose? You choose the one that has the lowest level of risk. Okay. Or for example, you were able to eliminate all investments, okay, whose risk is beyond, beyond your acceptable risk tolerance. Okay, how are you going to choose the best investment of what was left? You choose the one that has the highest return for a given level of risk naman. Okay, so let me just say that again. For the same level of return, you want the investment with a lower risk. For the same level of risk, you want the investment that has a higher return. Okay, now, step 5. You select the suitable investment. So, research and gather information on specific investments, and then you make the investment selections. And again, when you make the investment selection, take note if it will be able to match your investment objectives. Like, for example, you want to, let's say, you want to build a retirement fund, okay, which will be, let's say, withdrawn, okay, if you are 60 years old. Yan, so is a stock, investment in stock, a good alternative? Or are you just going to buy bonds, okay, or treasury bills, okay? Again, there are a lot of things that you have to consider, okay? What is your age, okay? If you are trying to build a retirement fund using stocks, okay, and you are already, let's say, 59 years old or 58 years old, okay, that investment vehicle may not match your objective. But let's say you are still in your early 20s, okay, and you want to use stocks, okay, to build a retirement fund. Okay, so you still have how many years to go? Okay, and based on studies, we expect that stocks in the long run will always increase in value. Of course, there will be some fluctuations, pero in the long run, it will increase in value. Okay, now after that, you construct a diversified portfolio. Now, when we say diversified portfolio, this is a group of assets combined together, okay, that, ano ba? No, I should say that again. This is a group of assets, no, that when combined, they were able to maximize the overall return for the portfolio's risk or minimize the portfolio's risk, okay, for their combined return. Anyway, we have another reporter, okay, who will discuss that. I think it's topic 5, so that will be reporter 4. They will cover diversification in detail. Okay, but first, no, you should first understand, you should first understand the concept of risk and return of a single asset before you can go to risk and return analysis of a portfolio. Exciting, and that's one of my favorite topics. And then finally, you have step 7, okay, which is managing the portfolio. You compare the actual behavior. When we say behavior, this is the trade-off of risk and return, okay? So you compare the actual behavior with the expected performance of your portfolio. If there are any discrepancies, then you should take corrective actions. Okay po? So those are the steps in investing. Now let's talk about taxes in investing decisions. Okay? Why? Because it's not just what you make, but what is left from what you make. Okay? So we all know that taxes will always reduce our overall return. Okay? So if your return is 10 pesos, okay, coming from an investment of 100 pesos, you can say that you have a return of 10%. But wait, that 10 pesos will still be taxed. Okay, so if the tax is 20%, okay, so what is now 80% of 10 pesos, that's 8 pesos. You see, taxes will actually reduce your expected returns. Okay, that's why we have to consider them. That's why we have tax planning. So in tax planning, what do you consider? First, you have the desired return after tax, dapat palagi. Okay? And then you have the type of income received from investments. Why? Because the tax rates actually depends on the type of income that you are receiving. And then finally, you have the timing of profit taking and loss recognition. No? Like for example, Let's have an example. Let's say you have a piraa. Sino ba yung mga teachers dito na may piraa? Diba? So, this one will be withdrawn upon your retirement. Okay, so timing is important. If this is withdrawn before retirement, aside from you will not be able to receive the employer's share, this will also be taxed. Okay, but if you receive this at retirement age, okay, the amount that you will receive will include, of course, the employer's share, and it will be tax-free. Ewan ko, that's how it was explained to us earlier. Now, moving on, okay, so what are the major sources of taxes in investing? You have international taxes, national, and local. May ganun pala, no? International taxes. And then you have types of income for individuals. You have your active income, portfolio income, and passive income. In some books, they only have two, active and passive. Why? Because the portfolio income is already part of your passive income. But wait, let me discuss. Why is the portfolio income treated as a separate item? First, let's discuss active and passive. An active income is an income when you are working. Okay, there is active participation. While passive income is earned, okay, due to because of some interest and just simply waiting, due to passage of time, we expect that there will be income in the future. That's why it's called passive. Napaka-minimal ng effort. Now, in between the two, if you try to come up and manage your own portfolio, di ba, there is, somehow a higher level of participation as compared to your passive income. That's why portfolio income is treated as a separate item. And because of that, okay, there is also, there is a different tax imposed, to portfolio income, okay, active income versus passive income. Now you know what are ordinary income. This is composed of active portfolio and passive income. Okay, they may be included. Why may be? Okay, because in some states or in some countries, passive income is not considered as ordinary income. And anyway, taxation is not our subject. I just want to tell you that these are the components of your ordinary income. Okay, and sometimes the ordinary income is taxed at a progressive rate, meaning the rates will go up as income goes up. Okay. Now, what about capital gains and losses? They have a different tax rate for this compared to ordinary income. So, you have your capital asset. This refers to the property owned and used by the taxpayer. Now, capital gain is when the proceeds from the sale of a capital asset is more than the purchase price. Now, the opposite will be your capital loss. So, when we talk about taxation of capital gains, it really depends if it was held for less than a year or more than a year. And for capital losses, okay, ganun din yata, it really depends, whether it's more or less than a year. But then, your capital losses should be first charged against your capital gains. Of course, with a limit. I'm not really sure about the maximum capital loss that can be charged against our capital gains. Tax advantage retirement vehicles allows taxes to be deferred until withdrawn in the future. And employer-sponsored plans. Yun nga, one of the examples that I know is PIRAA. So there's profit-sharing plans, or it could be thrift and saving plans. You also have individual plans, okay, and self-employed individual plans. Again, the details of this will be discussed by another reporter. Investing decisions over investor life cycle. Ito na yung sinasabi ko kanina, okay? Timing is very crucial, depending on your objective. So, we have to take note that investors tend to follow different investment philosophies and, of course, objectives. You can insert that as they move through different stages of the life cycle. So, if you're in your youth stage, okay, from 30s Now, 20s to 30s daw, okay, you should invest in growth-oriented investments. Now, when we say growth-oriented investments, these are investments that have a relatively low value at the beginning, but we expect them to increase in the future. Okay? So with that, there's higher potential growth and higher potential risk, of course. The higher the return, we expect that there will be higher risk. Stress capital gains over current income. Ayan. Now, you might be asking, sir, why it's advisable to invest on higher risk investments if you're in your 20s or 30s? Well, because the higher the risk, the higher the return. That's one. And since you are still young, you still have plenty of time to recover just in case something goes wrong. So it's okay to take additional risks. Okay. So some examples, you have common stocks, options, or futures. So that's for 20s and 30s. Like most of us, we are in our 20s and 30s. Okay. Now you have your middle-aged or consolidation stage. This is when your age is from 45, no, or early 40s to 60s. Yeah, and there are now family demands and responsibilities, okay, which is important, no, like for example, yung educational expenses natin, you have retirement savings, and if that's the case, you should move toward less risky investments to preserve capital. Okay, less risky. Why? Because this time you're just a little. No, you're just a little older, so you have less time to recover from your losses. Okay, so you should invest in investments with lower risks. Ayan. And you should transition to higher quality securities with lower risk. Like for example, high grade bonds, no? Higher quality means let's say they are more liquid or they are more stable. Ayan. What are some examples? So you have low risk growth income stocks, okay? Like your blue chips, okay? You can also invest in preferred stocks, although these are stocks the returns are less risky because they are fixed in nature, especially if the preferred stock that you buy has features like they are cumulative or they are participative, okay, or participating pala. Ayan. You also have convertible stocks, and then you have high grade bonds as mentioned earlier. Now, if you're in your retirement stage, ages 60 and older, okay, your priority should be preservation of capital. Ayan. And you should move towards highly conservative investment portfolio because, okay, you're not that young anymore and you may not have enough time to recover from your investment losses. That's why your priority now will be geared towards current income and less capital gains. Okay, so yon. Some examples, you have your low risk income stocks, government bonds, quality corporate bonds, ito na mga blue chips, and then you have bank certificate of deposits. Investing in different economic environments, you have market timing. What's this? This is the process of identifying the current state of the economy or market and assessing the likelihood of its continuing on its present course. Okay? So, ito na yung fluctuation doon sa economic performance natin. So, there are three conditions. You have the recovery or expansion, okay, wherein corporate profits are going up, okay, the level of economic activity is going up. Okay, most of the time we call this bullish economy. You also have the opposite, the decline or recession. Okay, values and returns on common stocks tend to fall. Okay, so this is when we call the economy to be bearish. Okay, and then you have the point of uncertainty. The point of our uncertainty is actually in between bullish and bearish markets. Excuse me. Why is it called uncertain? Because at that point, you don't really know if prices will go up or the economic activity will go up or it will go down. Okay. And nandito pala yung drawing. I got carried away. So, here you go. Expansion going up, and then you have the decline when the economic activity is going down. Uncertainty, you find that in your peak and in your true. Is it true or trough? Okay, so yun. Now, question now here is, when is the best time for you to make an investment? Of course, okay, in the early parts of expansion. And the best time for you to sell, okay, sell is at the later parts of the expansion. Or if you want, okay, you can buy on this part right here. No, aside from the early parts of expansion, it could be the later parts of the decline, or dito sa part na to sa uncertainty, okay? And you can sell at the later part of decline. So if you were not able to sell on this part, okay, the later parts of expansion, okay, you can sell it at the earlier parts of the decline. Investing decisions and interest rates, we have actually another reporter who's going to discuss this, okay? Pero spoiler lang, okay, the interest rates are the single most important variable in determining returns. Not just returns, but also values to investors for bonds and fixed income securities. Even for stocks, no? Even for stocks, because it has something to do with the demand, no, for the investment. So it says here that the interest rates and bond prices move in opposite directions. Like when the interest rates go up, bond prices go down, and vice versa. Bakit ganun? Of course, investors, okay, would like to invest in vehicles that provides higher interest rates. So if your bond is at 10% and then the interest rates provided by banks, let's say, is 11, 12, 13, 15, of course, no, you're going to sell the bond and then invest your money in the bank. Okay, so parang ganun. And that is also manifested in the values of our stocks. Role of short-term vehicles, eto, bibilisan lang natin. Number 1 is, aside from preservation of value, sana, okay, number 1 is to have an investment that is highly liquid. Why? Because you want to be able to convert that into cash when the need arises. Although in most books, no, they will say that short-term vehicles will also serve as an investment that will preserve the value of the fund, okay, most of the time, because it's short-term in nature, okay, and then the returns are very low because these are low-risk investments. Sometimes the value of the fund is not preserved as compared to long-term investments. Okay po? Advantages and disadvantages. Of course, number 1 is highly liquid. Okay, so there is low liquidity risk. Of course, low risk will be translated to low returns. Ayan. And there is a loss of potential purchasing power from inflation, especially if the inflation rate is higher than the returns provided by short-term vehicles. Anyway, it's more on liquidity naman tayo. At least kumita ka kahit papaano. So here are some of the examples. You have the deposit type accounts. Okay, you have the passbook, negotiated order of withdrawal account, money market deposit, and then you have your asset management account. I'm not going to discuss the details of this because these were already discussed in your financial management. If you still remember that subject. Actually, this subject, investment management, is a continuation of that subject. Okay, so we're just reviewing. Okay, and then you have the government issues like bonds, no, treasury bonds and treasury bills. Okay, one of the most preferred short-term investments because they are the ones that has the lowest risk, virtually risk-free. Diba? Why? Because if a government is not able to pay these bonds on time, what will they do? They are going to issue another set of bonds. Yan, they will enter into another borrowing agreement so that they can pay their liabilities. Okay? So, virtually zero risk. And then you have the non-government issues like certificates of deposits, okay, commercial papers, bankers' acceptance, and then you have your money market funds. Now, if you notice, okay, the risks for this type of investments is higher than that of the government issues. Anyway, let's continue. Okay, so short-term vehicles are used for, number one, savings. Okay, emphasis on safety and security instead of high yield. As an investment, the yield is often as important as safety. And it's used as a component of diversified portfolio. What does that mean? Sometimes it's not about the return, okay, of that investment or the risk of that investment, but it's more of what will be the overall risk or the overall return if we add this kind of investment in our portfolio. Ayun. Because it's possible, no? It's possible that even if the return will not go up, but because there is a lower level of risk, if you include that in your portfolio, okay, the overall risk of the portfolio can be reduced. Okay, so ayun. Now, it's also used as a temporary outlet waiting for attractive permanent investment. So instead of just putting your money in the bank, at least, no, it's in short-term investments. Okay, even if the profits is lower than the inflation rate, it's still earning better than the savings account. And you have the popular short-term vehicles as rated. Okay, I'm not really sure. I don't remember if this is the rating coming from Standard and Poor. Okay, so ayun. Anyway, this is not our topic po. Yan. Now, okay, so these are the learning goals. Anyway, I just want to show you the topics, okay, for reporting. Okay, so actually there are 16 chapters, 16 topics, pero I already reported the first one. Okay, the role of investment, role and scope of investments. So we only now have 15 topics for distribution. Okay, now I already distributed this to the class. So for the first topic, we have Mr. Ananayo Vadim. This is actually a very short topic, no? Short topics, we only have one reporter. So you have the second topic, si Sir Glenn. On risk and return, we have Ma'am Christine and Ma'am Gang. Okay. Portfolio concepts, you have Judy, May, and Justice. Investing in common stocks, we have Flemington and Mark. Naku, dapat pala nilipat ko si Sir Mark sa mas mahirap na na topic. Sorry po. And then analyzing common stocks, you have Jason Cruz and Emmanuel Okeke. Okay. Stock valuation, okay, for Ma'am Maureen and RV. Okay, market price behavior, we have Ma'am Lidevia and Jean. Okay, fixed income securities, okay, si Sir Guinness and Sir Kidit. Bond valuation, you have Sir Erwin and Zhao. Okay. Preferred stock and convertible securities, you have Kelly Chukwo, okay, working with Ma'am Will, okay. And we only have Ma'am Carmen for mutual funds. Managing your own portfolio, we have Ma'am Joy and Ma'am King, okay. For options, we have Haifei and Marielle. And then for commodities and financial futures, we have Xiao Wei and Kevin. Now, we have the following dates. Why do we have dates? Because how do I say this? You're supposed to report them. No, we are supposed to have a live reporting for this subject, but since there might be problems in connections, or some of you may not be available during the discussion, okay, we don't want the reporter to be the only one present, right? Or during live sessions, we cannot hear the reporter because they are not connected. Okay, so to avoid that problem, all our reports should be recorded. okay, and posted in YouTube. And then before September 20, you should give me the link to your reports. Okay, so what are the requirements? Okay, the link to your video reports and then the handouts. I will be the one to curate them. Okay, I will be the one to put them in our module. You know, the layouting and all. Okay po? Ayun. So, next week will be September 13 and that will be a holiday. So I think everyone will have enough time, especially the first two groups. Okay? Sir Ananayo and Sir Briones, okay, you have 1 week, 2 weeks. You have 2 weeks to prepare for your reports. Anyway, these are very easy topics. Walang masyadong computation yan. Okay po? So, by September 18 or 19, no, at least you should give me the link and the handout so that I can put them in our modules. And then from there, okay, I'm going to put them in the discussion board so that everyone can ask questions. Okay, so ayun, at least the questions will be documented. And your questions will be, will be composed better. Ayun, as compared to live sessions. Now, if you notice, the last date is November 15 because our exams will be on November 22. Ayan, siguro ang saya-saya ni Sir Kevin and Ma'am Mariel ngayon. Yay, kami yung huli na mag-upload. Our exams actually will be on October 11 for midterms. That's why there's no October 11 in our calendar. And November 22. So that will now be our finals naman. Okay po? So, there will be assessment na. Ayan. So, iba po yung approach natin in this subject as compared to our previous subjects, especially for those who were my previous students. Okay? So, ayun. Ano pa ba? If there are other questions, please feel free to message me in Canvas inbox. Okay? Or write your questions in the comment section below because I'm going to put this video in the discussion board. Okay, so I guess that's it. So salamat po ng napakarami